Hey everybody, Jason here. Happy hump day. Hope you guys are having a nice green day and just a great day all around. I'm super happy because temperatures went back down to the 70s and we went back down to the 60s overnight, so it made everything much more bearable all the way around. Um, so today, up a couple grand. We've been kind of, bouncing up and down. Tesla's kind of just holding steady to where it is. But at a couple grand, I'll have to pay, whatever, 20% in taxes, and then half of the gains today will go to my tabs, which I paid yesterday. I was pretty surprised. This is the first time I bought a brand new vehicle, so I know, just based on or one this expensive. So I know my tabs were going to be more expensive than usual, but $1,000, a little bit over with their service charge out the door, and I think $985 without the service charge. And I looked up one of the items on there. I had a vehicle electrification tax of $75. So I found this article, and basically it's to finance stations that would probably never use. And the guy in this article, poor guy, he has a 2010 Prius. Just looked it up. I wasn't even sure if they had a plug-in Prius at that point. They do. The range on it is 13 miles. And like this poor guy, he's like he's retired, on a budget, and somebody who has a plug-in hybrid, they're not going to go find some charging station out in the middle of nowhere. It's a whole 13-mile range. He's going to plug it in probably at home, and when you go to the grocery store or make a quick run, you use up that electricity, and you come back home and you probably plug back in. Otherwise, if you're out and about or going farther, there's no way you're plugging in, because you're probably getting 50 some miles to the gallon anyways, and it's just not worth your time, especially how slow those things charge. So for that guy, absolutely ridiculous. For me, I think it's pretty crazy. I'm not going to use, 99% of the time, I'm not using a charging station outside of the home, like in the first place. And when I am, I'm using Tesla superchargers, because that's the only way to do it quick enough. And they're all super conveniently located anyways, and for use on longer trips, not anything day to day. Drive a couple hundred miles is a long ways to drive. So anyways, back to the account. Let's see, the only thing that we did today, I grabbed a SOFI $19 call, kind of a somewhat of a meme stock, and getting a lot of love in Wall Street bets today. So we grabbed a $19 call, paid $90 for it. Kind of a little bit of a lottery ticket, but not too bad. The intrinsic value right now still has $30 worth of intrinsic value. So the intrinsic value, of course, is anywhere between the strike price and the current price of the stock. That's what it's worth basically right now. And then any of the other value, so the difference, so the $43 is extrinsic value and has to do with expected move. So if it moves up, it'll be about a 1-to-1 ratio at this point. So we'll see how that guy goes. Obviously losing on it, lost about 20% on that right now, but if it's a complete loser, fine. If we happen to have some jumps at any point, I can get out of it and collect a little bit there, kind of just for fun. Not a big play. Other than that, I haven't moved anything else since Tesla's just trading sideways. We're just waiting for some premium to decay, some little bit of theta decay here. Here's our Tilray wheel that we're running. Tilray was actually down quite a bit today. I'm not sure what the news was, but they had a really nice pop, like 8.15, 8.20. I probably could look at that, 75-cent pop, which means we'll probably not get assigned. Since we do still have a couple days to go, it's still definitely possible, but that's all part of the wheel, right? Either just keep your premium, you get assigned, or you get calls or shares called away. All possibilities with that. So everything else, we're just waiting for the theta decay to happen. we have our call credit spreads, we have our put credit spreads, we have kind of a YOLO-ish play right here, relatively cheap. I only paid $85 for this, $85. This is a long call butterfly with a mid price of $7.05. High risk, high reward, relatively cheap. If it happens to hit that center, we will make quite a bit of money. But we do have to wait really until expiration to collect the most amount, and it needs to be right at that strike price. We could close a little bit earlier for a little bit of profit, but I'm not going to do that since we do have production and delivery numbers coming out on Tesla. That is a very good reason to see a pop, which usually happens a day or two after the end of the month. So it could possibly happen on Friday. If it happens after hours, well, then it's not going to push the stock very much. So we have that, and then same thing with this. This is a long call a long call iron condor, and if we happen to hit anywhere between 710 and 740, this is also a high risk, high reward. Paid $2 for those, and then going on to the following week, I have 3 of these. These are extremely cheap, but high reward. If we happen to hit, you can see our strike prices here. If we end up, and this one is actually pretty narrow, which is why they were so cheap. If it hits between 720 and 725, we collect quite a bit. But since we opened this up out of the money, they only cost us $32 a piece. We bought 3 of them, so this total play less than $100. I actually wish that they showed the little chart when you're opening these up. Is kind of nice, the little profit and loss chart. I wonder if we can do one of those real quick. Let me pause this and see if we can look at that. And here we go. This is the chart that I was looking for. I just went ahead and re-entered all the strike prices like I was purchasing it again. You can see right now this play would only cost you about $25, but if we happen to get at expiration hit anywhere between the 720 and 725, we have an expected profit or loss of $473. So very, very good upside, but it would have to hit right exactly between those points to be profitable. And actually anywhere here, you can see we would have a little bit of profit, which would be pretty decent, but the wings are not very big. And if it ends up anywhere outside of that, the 715 or 730, anywhere outside of that, we lose our entire $25, or in my case, I think it was $32. We are not going to open up one more of these. So let's back out of this guy. And I think for me, that is about it. Not planning on making any more plays, but that always changes day to day based on price action. I did open up a few put credit spreads in my Ameritrade account, but they're nice. They're nice and super far out of the money, and just because I'm really hoping that we see somewhat of a pullback on Tesla so I can buy my debit spread. I know I've been saying that for the last few days, but that is a big thing on my mind. Oh, and actually, and I haven't looked at it yet, this is Alibaba. I don't know what the news was today on it, but it is down a little bit today. And this is one I've been looking at to buy a leaps on, probably a year and a half, 2 years out, like the 185-ish, 190 strike price. But of course, it's gone up a bit since I was looking at that. But if this comes down, that's another one I'm going to be looking at buying something pretty expensive. It would be about a $5,000 or $6,000 play on one option. So there you go. If you guys have any questions or anything about any of these plays, let me know in the comments. I'll do the best I can to get back to you. Other than that, I hope you guys have had a great green day. Love you guys. And let's make a lot of money.